Good morning, April 25th. It's a Monday, start of the last week of April. Now, last week for me was one of the most difficult weeks for a long time, as far as I can remember. Not really a massive surprise. I didn't really trade much myself. I tried to come up with some trade ideas, but it's a bit like the week after New Year. Not quite as bad, but volumes are thin. You get some crazy moves, and I found it utterly unpredictable. I hold my hand up and admit to that. The dollar roared at the end of last week, having had a strong start to the week on the Tuesday when the markets opened again. Then the market collapsed. So we're now lower again today. This is the daily chart for the New Zealand dollar versus the US dollar. I don't know where that collapse came from. From what I read on news channels, it's a case of the market suddenly decided on Friday to react to higher bond yields. Well, higher bond yields are not something that only happened on Friday. That's been happening for weeks and months. I don't know what this reaction came from, really. It can't just because bond yields happen to have yet another jump. Aussie dollar, same situation. I guess I should have known that once we broke here, the market could plunge. But it's difficult because these markets have been trading sideways for such a long time. Look at this Aussie dollar. Look, this goes back to June 2021. So what's that, 9 months, a bit less. And really, we've just been in one big sideways trend, quite a volatile sideways trend with fairly prolonged periods of a movement. Although look at this movement up here. How could you, if I'd have told you that the market was going to run from a low of, where is it down here? Call it 69.70 up to a high of 76.60. So, 700 pips. If I told you, yep, do you know what? The market's going to run up 700 pips from the 28th of Jan to the 6th of April. So what are we going to call that? 2 months. Just buy it. It would have been almost impossible to run a long position, even if you knew that was going to happen. Look at the deep pullbacks that keep happening. Anyone with any sort of discipline at any sort of trailing stop would have been taken out of a long position. This dip down here took us down to 71.67. Well, that was the same peak as this, as when we were just like 3 or 4 days into the rally. So having seen the market up at 74.40, call it, the market then dropped to 71.70. That's a huge drop, and it was only then that we started to get a big move up. And how would you have known to buy it down here? I've been doing this 34 years, and I've been doing technical analysis for 15 years or more. There's no way, even with hindsight, that I can say that I would have seen that. So the problem is, for a lot of these markets that are moving sideways, and I can show you some more, even the moving averages are really no good to us at all. On the daily here, and I only use longer term moving averages. I only use the 100, the 200, and the 500, and they're all moving sideways. They're all converging because these markets have been trading sideways for so long. And of course, 2 or 3 days of a big down move, no matter how many hundreds of pips it is, isn't going to change those moving averages significantly. So I am struggling to find decent trades. Well, I certainly did last week. Up until then, we'd done really well. We were making somewhere between 1,000 and 2,000 pips a week, but I certainly lost a little bit last week. Okay, pound cable. So that's been in a bear trend, a decent bear trend. We broke lower. I had thought this could be a good support level. I had thought that could even be a triple bottom. Anyway, not the case. Economic numbers out of the UK indicating that we could be the economy could be weakening. Pounds collapsed. Now, if we look at this more on a weekly chart, I can see that there is quite significant potential on the downside for this for cable just to go a lot further. Again, mostly sideways. This really look where we're trading. We're trading now where we were back in September 2020, DEC 2019. We really haven't gone anywhere. We've gone up a bit, we've gone down a bit, and we're really back in the middle of the range. In fact, right, I've just put some trend lines on there, upper trend line, lower trend line. I've missed out this spike down because I think really that's where the trend line should be. So the lower end of the range is around 119.50. The higher end of the range is around 114.00, and we're 140.00 rather, and we are pretty much in the middle, near at 130.00. So 127, 128.00 is where we are. So we're bang in the middle of the range now. Again, very difficult. If you're trying to, this is the weekly chart, so this goes all the way back to October 2016. So really, we've been in a long, we've been in a sideways trending market for cable for over 5 years, coming up for 6 years. So it doesn't make life very easy for people like us who are trying to day trade. Anyway, Looks like there could be further room on the downside for cable. Dollar CAD, another big sideways moving market. Look at this one. There we go. A big sideways range. No clear pattern here for me to talk of. We've spiked up, but we do have some resistance at around, let me remind myself, 127.80 today. That's my key resistance level. If we dip down, I've got some support around. Now, the only way I could identify support level was really putting a trend line on these little peaks up here, and then using this trend line, and then combining that with the 23.6% fib that you see here, which is around 126.60. So my support level on the downside is around 126.60, 126.40, and it is just from that 23.6% fib and that trend line. I'm ignoring the sideways moving averages because they're not really giving me much assistance as far as support and resistance is concerned. And of course, they've been converging and moving sideways for a significant period of time because we've been in such a long-term sideways trend. Now, something that has not been in a sideways trend is the yen. And in this case, the dollar versus the yen. Dollar's been soaring against the yen. Most currencies have been soaring against the yen. Bit of a negative candle here a few days ago, which to me suggested that the market would start to trade sideways, which it has. What does that mean for us as traders? Well, it's not a sell signal, so I can't be certain that the yen has bottomed out and will start to go higher against the dollar. In other words, I can't suggest that this price will turn down. That would be too risky. We're in a very strong bull trend, and the Bank of Japan has indicated that it wants to keep their monetary policy very loose. So one thing it does allow us to do, though, is hopefully when the market does retrace and come back a little bit, gives us an opportunity to buy now, because it was extremely difficult to buy here unless you're the kind of trader that likes to buy on a breakout, put a stop to enter order, a buy stop to enter order, so that when the previous high is broken, you're jumping in automatically, or even if you're doing that manually, then that's great. That strategy works really well in a market such as this. But that isn't the kind of trader that I am. For me, it works better. Is what I'm trying to say is when we have bull flags at least. So the market will pause like this. This could be a bull flag. You buy on the break above the bull flag. Now this could be a bull flag. This could be a sideways pattern, which ends up being a flag. We go sideways for days, maybe even weeks, and then we break higher. Well, and then once we break up through the highs, that probably is the completion of the bull flag. You jump on board with a long position and you run up for the next significant move higher. So that could be the case. What I do know is that red candle indicated a consolidation, which is already happening. We're trading sideways, and right now, although I'm not happy I wouldn't enter a short position too risky, I would be happy to buy, and I've got some buy levels. Let me see, my dollar yen buy level, it's quite a bit further down. It's around 127.10, 126.90, which is around that trend line. Now, what is that trend line? Let me show you. This trend line was my break point for me to know that the market was going to go a lot higher again. This trend line goes back from 2007, joins the peak at 2015, and that is my trend line just above the 127.10 area. So that's why I've got a good support level down there. That was my break point, and that is where I think that we should find good support. In fact, we have already. The low of this candle at least was 127.45, so we held above the trend line by quite a few pips. We'll see if it tests. We may just trade in between sort of 127.00 and the high, which is, let me remind myself, 129.5, 129.40, 129.50. So we could just hold within that 250 pip range for a little while. That would be a nice range to trade. Scalpers would be happy taking 100, 150, 200 pips out of that range. So that's something to keep an eye on. Okay, I'm going to leave it there. That's the Forex markets. I'm going to now finish this video, and I'm going to record another video, have a quick look at gold, silver, oil, and some stock markets. So once you've watched this, keep an eye out for the next video, and please do have a look at it.